This essay example, as well as thousands of others, is available in text format on our website for free and without registration. Simply Google Ivy Panda Free Essays.
Introduction. Accounting and finance are the fastest-growing disciplines in the world of business. The two disciplines work together to ensure the companies are run efficiently. However, accounting differs from finance in some respects. Accounting mainly deals with providing data that helps in measuring the performance of the company. The data is also useful in assessing the financial position of a firm and the tax liability of the firm. Finance, on the other hand, emphasizes decision-making about the company's financial position and offers advice about the profits and losses. In other words, finance makes use of accounting data to make decisions about the firm's financial condition and recommends the way forward. Accounting prepares the financial statements while finance analyzes them for purposes of decision-making. Besides the use of financial statements for decision-making, there are other uses of financial statements. Various persons and authorities have a significant interest in a company's financial statements. According to Tweedy, there are internal users and external users. Internal users include managers, shareholders, and employees. The external users include the government or tax authorities, institutional investors, lenders, the general mass, and the media. This has called for strict regulations in accounting and finance to ensure that the interest of all these persons, bodies, and authorities are safeguarded. Some rules and principles have been set by international accounting and professional bodies to ensure efficiency in accounting and finance. Internationally, we have an International Accounting Standards Board, or IASB, that is charged with the responsibility of developing and ensuring enforcement of International Financial Reporting Standards, or IFRS, initially called International Accounting Standards, or IAS. These standards are either based on principles or rules. There has been an ongoing discussion concerning the principles and rules-based accounting standards. The purpose of this paper is to compare the two approaches to accounting. These shall be discussed in the context of the role of regulation in accounting and finance, the FASB, the conceptual framework, the accounting profession, and any other relevant body. Principe-based versus rules-based accounting standard. Currently, most companies are required to follow the Financial Accounting Standards Board, or FASB, way of preparing financial statements. FASB and IASB use principles-based accounting standards. There has been a discussion on whether the principle-based accounting standards would serve better than the commonly used rules-based accounting. Following the collapse of Enron and WorldCom companies, the principles-based accounting standards have been subject to great criticism. Rules-based accounting provides rules that must be followed in preparing the company's financial statements. Rules are very important because they enable the accountants to arrive at the prescribed right decision. Accountants prefer rules-based accounting because they argue that without the rules they might be brought to court in the event they make incorrect judgments regarding the financial statements. They argue that with strict rules the events of lawsuits are mitigated. Rules are believed to reduce ambiguity and increase accuracy. This spares the management the risk of making incorrect reporting decisions. According to Financial Accounting Standards Board, principle-based accounting standard is a conceptual basis for accounting. For example, the Generally Accepted Accounting Principles, or GAAP, is a set of principles that stipulates what a financial statement should achieve. This approach entails key objectives set to ensure good financial reporting. The main advantage of this approach is that the broad guidelines set are applicable and practical in several circumstances. Though rules are unavoidable, they may not apply in every situation. These precise guidelines and requirements would compel the managers to manipulate the statements to suit what is necessary and compulsory. The main difference between the two approaches is that in principle-based accounting, the accounting standards assume basic principles and rely on the financial statement preparer's interpretation and judgments before they can be implemented. Rule-based accounting, on the other hand, applies the rules that limit the flexibility and judgment of the financial statements preparers. The judgments and interpretation of the financial statements are dictated by the rules and not the financial statements preparers. Comparison. Advantages of principle-based. They are very adaptive to the changing environment and products. This is because the principles apply and are practical to several situations. They, therefore, require fewer maintenance measures. Disadvantages of principle-based. According to Top and Myring, a company using principle-based approaches are difficult to audit concerning compliance to the principles, consistency in applying the principles, and reliability of interpretation across different entities. This is because the principles are general to all entities and they do not attach a value judgment to the financial statements. The judgment and the interpretation depend on the preparers of the financial statements. They are in perpetration and judgment may be hard to audit for consistency. There are dangers of manipulating financial results because the interpretation and judgments are made by individuals. Advantages of rules-based. As opposed to the principles-based approach, in the rules-based, auditing for compliance is easier because the judgment and interpretation by the financial statement preparers are restricted. It is also easier to audit for consistency for comparison of financial statements across entities. The rules also mitigate the dangers of manipulation of financial statements because no judgment or interpretation is done by individuals. Disadvantages of rules-based. There is a lack of flexibility concerning changing environments and products. This calls for continuous maintenance. The role of regulation. According to Cuccia and colleagues, the role of regulation in accounting and financial reporting is to ensure that the financial statements are prepared and analyzed according to the agreed accounting and reporting standards. Regulation entails the responsibility of all accounting bodies to execute the duty they were charged with. FASB stands for Financial Accounting Standards Board. It is based in the United States and is responsible for setting and governing accounting and financial reporting. FASB highly supports the use of a principle-based as opposed to a rules-based accounting approach. Conclusion. As arrived at by the IASB and FASB, the principle-based accounting approach is the most reliable in reporting a company's financial statements. However, rules are not avoidable and should apply in some circumstances. Did you like this principle-based versus rules-based approach to accounting sample? To get more works like this one, make sure to check out the free database of academic paper examples at ivpanda.com. You will find thousands of samples for all your study needs without even having to register.